Good morning, ladies and gentlemen, and welcome to the ECSC Group PLC Interim Results Investor Presentation. Throughout this presentation, investors will be on listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question in the box beneath and press send. If you're accessing this on a mobile device, the Q&A tab will be at the bottom. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit to the following poll. And I'd now like to hand over to Ian Mann, CEO of ECSC Group PLC. Good morning, Ian.
Good morning. Welcome everybody. Thank you for attending. This is the first of these such sessions that we've undertaken. I know I've met quite a few of you at small investor events that we've been doing for the last 18 months. I know we have a couple of our institutional investors that have joined in, even though we've been speaking to them over the last couple of days. So welcome to everybody. We've got, if you're used to our results, we've got a few more bits of information in these slides. So we've added a little bit more detail around some of the technologies that we use. We've added a little bit more detail about the makeup of some of our larger clients, and a little bit more detail about the partner program that we started at the beginning of last year. So in addition to the headlines, we've got a little bit more colour for you in terms of some of the things that we do. We've also got an update on COVID-19. That's clearly top of most people's list of things to ask about. So hopefully we'll cover everything that you need. I'm aware we've got some pre-submitted questions that we're going to go through at the end, and I will keep an eye on the screen here with questions that you might submit as we go along. So the slides, you have the usual disclaimer written by Allenby, which I'm sure you're aware of, so I won't go through that. So I'd just like to firstly introduce the team. So starting with the non-exec directors. So David Matthewson joined us. He looks after the financial side of the non-exec roles, and he joined us when we floated at the end of 2016, and then later took over as chairman. Elizabeth joined us after she sold her business EG Solutions, which was also a PLC. She was actually a client of ours, so she'd received the services that we provided, and was impressed with the quality of what we did. And when she sold her business and was looking to adopt some non-exec roles, then there was a nice fit for us there. And you see the management team, the thing that distinguishes us from a lot of our comparator companies on AIM is the longevity of service of the senior management team. So we've got a very experienced senior management team. We've been doing cybersecurity for the last 20 years. So we've seen a lot of changes in the industry and got a lot of experience in terms of what works and what doesn't work. So let's have a look at the H1 highlights. So for us, January to June is our first half year. And the headline is that certain things have been affected by COVID, and some things haven't. And I'll go through which of those, how it's affected the business. The thing that's grown strongly is the managed detection and response, which for us is managed services, mainly 3-year recurring revenue contracts. And the recurring revenue element is 25% up on the same period last year. So we've seen a consistent growth of that area. And that typically will grow by 20 to 30% a year. And we've seen strong renewals. So all our renewals that were due in the H1 have all gone through without a hitch. And we're seeing new clients being added there. And as a result, you'll see that the managed detection and response order book has grown nicely as well from last year. The assurance division is where we're doing time and materials, consultancy type services. So testing systems, helping people gain certification standards. And that revenue has grown from last year, even though that's the area that's got affected largely by COVID because of the nature of the business. Usually we would do that sort of thing on site. So that took quite a hit when we hit April and people went into lockdown. But we still posted 4% growth on H1 last year. Revenues are pretty flat. So the reason revenues are quite flat, even though those two areas have grown, is because we saw a decline of incidents in COVID, and that was largely down to people just doing a lot less activity. And there's other things like client expenses which have disappeared because we're doing things remotely. So we re-engineered the business to be able to do everything remotely very quickly. So the disruption to the consultancy type services, that came from clients wanting to postpone things. It didn't come from our ability to deliver. We have continued with our profitability that we moved into second half of last year. So we posted a £52,000 adjusted EBITDA profit, and that contrasts with 184,000 loss for the same period last year. We've continued to win new clients. So 48 new clients, so slower than H1 last year, but understandably with people in lockdown. And the partner program is now making a significant contribution. So I'm going to come on to the partner program and give you some more stats from there. But the partner program for us is recruiting partners who can resell our services or refer business to us. And I'll go into that in a little bit more detail. One of the big changes from last year is our cash position. So we started to generate cash as we started to move into profit second half of last year. But our cash position was at a low point at the end of H1 last year, £190,000. We do have a £500,000 facility with our bank that we don't use. So we're in an okay position, but leading into COVID, we thought we need to take a more cautious approach. So you'll notice that we did a fundraise of £500,000 that was fully subscribed back in April. And we thought that was a sensible thing to do, entering a period where we couldn't say what level of impact we would have from COVID. We knew there would be an impact. We couldn't say what the level of impact would be. And also there was not really much clarity from government as exactly how the support would work and for how long. So we thought bolster our cash position is a sensible precaution. That means that our cash now is at the end of H1 is 1.26 million, and you'll see when we did our RNS that our cash by the middle of September was up to 1.6 million. So our cash position looks a lot healthier now. There is element of government support in there. Those are the delayed VAT and PAYE payments that are available to all businesses. So that amounts to 0.77 million. So we've detailed exactly the amount of that, so you can work out, look, this is the true cash position when that government support is repaid. That government support was due by March, but there was an announcement yesterday that is getting delayed. So there is a question there about increasing trade and other payables, and that is basically that government support. So that's the figure that somebody spotted there, that's the extra money that has to be repaid. So I will move on. I'll come back to a bit more of what we did in COVID and how that impacted things as we proceed. So I'd like to just outline what it is that we do, and give you a little bit of detail, and then how we organise the business. So everything cybersecurity, and that's been our focus since we started 20 years ago. It might have changed its name. So when we started, you would call it IT security. Then it was more termed information security, and now most people would call it cybersecurity. So it starts with we help prevent breaches. So we have a range of services of testing systems, reviewing systems, and helping people spot the weaknesses and address them. And an important principle of cybersecurity is that all the breaches you hear about, they are all preventable. Sometimes the people who have been breached might give the impression that this was so sophisticated and so clever that they're the unfortunate victim and they couldn't have prevented it. That is them trying to just make the best of a bad situation. Having dealt personally with incident response and breaches for 20 years, I get personally involved, we've never come across or heard of a breach that wasn't preventable. So these things are preventable, and a lot of our work is testing and reviewing systems and helping people prevent the breach. We then have the managed services, and the managed services is predominantly monitoring systems to monitor and detect the early stages of a breach. If you can detect a breach quickly, you can deal with it before it escalates into something serious. And I'm going to give you an illustration of how that works. And combining those reviews and helping people improve and putting monitoring in place, there's a number of standards that people can get to both demonstrate internally their competence in cybersecurity or demonstrate externally and use them for tenders and winning new business. So there's a lot of different standards out there, some of them international standards, some of them UK-based standards, and we support those and help clients achieve those. And then if things go wrong for a client and they have an incident, and this could be somebody who's never done any business before with us and just calls us, or it could be somebody who's got a retainer in place with us or some other services. But we have an incident response service, and that operates on a 24/7 basis, and people can call us and we can get teams on site and put equipment in and connect them back to our monitoring systems and deal with incidents of all sizes. So those are the range of things we do. How we organise it in terms of the business is 2 divisions, and we've done a little bit of renaming of these in these interims. But for us, managed detection and response is those managed services where we're monitoring people's security. We have 2 operation centres. One based here across the road from where I sat now in Bradford in Yorkshire, and one in Brisbane, Australia. We don't have any Australian-based clients. The Australian operation is purely to give us a quality operation that can give us proper 24/7 coverage. So it's not fundamentally a good idea to have people working night shifts looking at your security. So trying to do it all from the UK or internally in your own business presents real difficulties. And there's 2 real challenges. We're trying to do things on a 24/7 basis with night shifts. The first one is that people are tired, and it's not actually very good for your health. It's proven that people who work consistently over many years on night shifts actually don't live as long. So it's not a good selling point for somebody to sell the idea of night shifts. And also, it's not good for recruitment. So if you want to recruit and retain the best people, people are very open to working 7 days a week, which is necessary for us. Gives them time off in the week, and that's fine. But actually working nights is not a good sell, and you will lose your best engineers and you won't recruit good people. So for us, Australia is about giving a proper 24/7 service, and we chose Australia as not a low-cost operation. It actually costs us approximately 30% more to employ an engineer in Australia than it does in the UK. But it's a quality location with quality of connectivity. The time difference is pretty much perfect. It's either 10 or 11 hours, depending on the time of the year. And importantly, we've got a good basis of local universities to recruit from and a good technology sector. And also a trusted regulatory regime, in that it's a trusted location to manage things from, and we're doing it in a GDPR compliant way. It's wholly owned by us. They operate under all our security certifications. So we chose Australia for quality, not for low cost, and we also only employ Australian and New Zealand nationals within the operation, so we don't ship people in from a low wage area to work in the Australian office. So the managed detection and response does those managed services, but it also includes incident response. And the reason that we put that in the same division is pretty straightforward. It's the same team. So when there's an incident, it's the team that develop and manage our managed services and our technologies. They're the people who help with incident response. So it makes sense from a cost perspective to put it in the same division. And the thing that really sets apart our managed services compared with competitors, as well as the proper 24/7 coverage and the 2 locations globally, is that we develop our own intellectual property. We have our own technologies. We've deployed our own technologies for the last 20 years. And that includes artificial intelligence. And I'm going to show you an illustration of what the artificial intelligence achieves, and how that is also complemented by people, and why you need both sides of it. The assurance division is the time and materials, normally on a daily rate, testing and reviewing and certification. So penetration testing is the technical term in the industry for behaving like a hacker, as in a company pays you to hack into their systems and you produce a detailed report and say, this is what we did, this is what worked, this is what you need to fix. And that's, of all the services we do, that's really the longest standing service in the industry. That's been around for 25 years. It's a good way to win new clients, and one of the things that distinguishes the two divisions is we tend to win new clients in the assurance division, and having worked with them over a period of time, we tend to get opportunities to provide managed services. It's pretty rare that you get the first service you deliver for a client to be a managed service. So normally it's an assurance type service that you would deliver first. So testing of systems, we then do what we call cybersecurity reviews. Which actually on the bottom of it is a little bit different to penetration testing. Penetration testing, you behave like the hacker does. You try and hack into the systems. The cybersecurity review, you actually sit down with the people managing security and you say, right, what technologies have you got? What do you think these technologies are doing for you? Let's look at the configurations and let's work out how effective they are. And effectiveness is the key, because what you find in a breach is typically people have got all the right technologies in place, but they haven't managed them properly, haven't configured them properly. And it's how they manage security that tends to lead to a breach. It's mistakes people make that tends to cause breaches. So a cybersecurity review says, have you got appropriate technologies? Quite often the answer is yes, but then how are you using them and how effective are they actually in implementation? And then certifications. There's a lot of different standards out there and new standards emerging all the time. There's three main standards. In the UK, we have a certification called Cyber Essentials, and that's targeted at the SME market, although some larger companies are now needing this because it's appearing in government tenders. But it's only a UK standard, but it's a good standard. And if you're involved in small businesses, we would certainly recommend that as a good starting point. And then the two international standards, the main standards in the industry. ISO 27001 is an international standard. It's titled Information Security, but it includes cybersecurity and technical elements. But it's a bit broader. It includes security of handling paper and discussions and HR and physical security. So it's quite a broad standard. And then there's a very specific technical standard for organisations handling payment cards. So if you handle a payment card, whether it's a debit card or a credit card, then all the systems that card data flows through all have to comply with this technical standard. So we help organisations achieve that. We also hold that certification ourselves. Obviously, we can't certify ourselves. Somebody else comes in every year and does that. But our managed services are also certified to the payment card industry standard. That means if somebody's got their payment card systems and they're finding some technical cybersecurity element of that really tricky, which they often do, they can outsource that to our security operations center, and the stuff we do is already pre-certified to meet that standard. And as you probably expect, we also hold the other standards. So the standards that we help people achieve, we obviously hold those ourselves. So a key part of winning new clients is the assurance division. And a key part of providing services either directly or through our partners, which I'm going to come on to. So I said I'd give you a little illustration of artificial intelligence. So artificial intelligence has turned out to be really quite useful in our sector, but it hasn't replaced people. And a word of warning, if you come across a company who says their artificial intelligence in our sector is so clever that you don't need to employ specialists anymore, then we would say, don't just go by what we say, but look at what the National Cybersecurity Centre say. Their UK government, but they tend to talk sensible, practical things for cybersecurity, good source of information. And they've very clearly said artificial intelligence is decades away from replacing people. We would agree with that. Clearly, our artificial intelligence is better than everybody else's, just like everyone else would say that. But we're very clear that artificial intelligence has a position and a place, but you need experts as well. And this illustrates it. So what we've got here is some stats from a single client, but it's a typical client for us. And this is from April. So every month we produce stats for a client to say, look, this is what has happened. These are an overview of your service. So this client is buying a 24/7, 365 monitoring service for us to detect breaches as early as possible so that they can address them. And that's a really key benefit, in that when we're doing incident response, we find that there is a gap between somebody first getting hacked and the incident turning into something really serious. Now, that gap can be short. So this year we had an incident where there was 4 hours from the client first getting hacked to the damage being done. And the damage usually either ransomware or data being stolen. So only 4 hours. But equally, we've had an incident this year where the client had been having security breaches unbeknown to them for 5 years. So you've got a huge range from 4 hours to 5 years. But if you can detect it at the earliest stages, you can prevent it escalating into a serious breach. So what does that mean for this slide? So the client has got 1,276 devices. So that can be laptop computers, mobile phones, network devices, servers. So each device, 1,276 devices. Now, those devices can be configured to generate logs. And a log is a simple record to say, this has happened, this has happened, this has happened. So, for example, you log into a computer, there can be a log generated that says you, as a user, has logged into that computer. But you might try and log in, if you're a hacker, and try a password and it doesn't work. So that is a failed login. That would also generate a log. So that could be interesting, but you might be a user that gets your password wrong every morning. So you getting your password wrong might not be suspicious. But imagine in the company if simultaneously 500 people all try to log in and get their password wrong. That's not going to be normal, so that's unusual. So you can analyze logs and spot unusual behavior. You can spot devices doing things they don't normally do. So let's say, for example, that you're a UK business, and yet one of your servers inside your network suddenly starts sending communication to China. That might be unusual for you, and therefore that's a potential breach that's just happened. So we need to analyze those logs. Now, this is the problem. The problem is there's too many of them. So in this case, just 1,276 devices generates 3 billion logs in a single month. So clearly, you can't have people going through those logs. So that's why this form of detection has really only been possible with the advent of artificial intelligence. So you need technology to make sense of that big data. So 3 billion logs, the artificial intelligence and the automation throughout the month has then turned that into 259 alerts. So a huge difference, 259 things of interest, suspicious things that need looking into out of 3 billion. Now, the problem is if somebody buys a system that is just artificial intelligence, somebody has to sit and look at those 259 things. And if they do that inside their own company, they tend to get bored quite quickly. And sometimes they don't understand it technically. So what you often find in a breach is there'll be a detection system sat there, but nobody's looked at it for months. And when we look at it after the breach and go back, we say, well, actually, this was your opportunity to have spotted the breach and prevented it becoming serious, but you missed that opportunity. So you need some coherent processes and expertise 24/7 to look at those alerts and make sense of them. So the bottom part of this picture is what the people have delivered. So these are the analysts and the engineers in the 2 security operations centres, 24/7, analysing the alerts. And what they've turned that into is useful outputs for the client. So the client has received 59 requests for more information. So what this means is we've spotted something that we don't fully understand, but we don't think it's serious and we don't think it's a breach, but we would like some more information to help us tune the system. So we think this looks normal, but we'd like to know more because we're always trying to improve things. So those can be, get back to us within the next few weeks, try and clarify those. But then issued 5 things that need some investigation. And our definition at that level is these need to be investigated in the next business day, but we're not waking you up at 2 a.m. on a Sunday morning. So they're pretty urgent, but not an emergency. So you get back to us and we clarify these, and we would expect most of those not to be a breach. We're very cautious and we have to be quite risk averse, but most of that category will not be a breach, but there's potential there and we want to understand it quite quickly. But then they've had 1 confirmed breach, and that breach is relayed to the client within 15 minutes. and that's at the point where people will be woken up. If they don't operate 24/7, phones will be ringing and people will be woken up because we know this is a breach. We've seen similar behaviour in other clients and people need to react to it. Now, this client may have an incident response service with us and we may be the people who are then responding, or they may have their own internal people who will deal with that. So, but most people who buy 24/7 would also use us for incident response. So that's a nice illustration of what the technology can do, but why you still need the people. The people can't deal with that volume of data without the technology. The technology can't put into context and make sense of things to alert you on what's important and what isn't. So you need people to interpret that. So that's the latest in terms of how artificial intelligence really helps our industry, but why you still need people as well. So I said I'd talk a little bit about the partner program. So we announced at the start of last year that we were going to recruit sales partners. And for us, a partner can be anything from an individual consultant, many of who we may have come across in our work over the last 20 years. So people who know us and can see opportunities for our services and will just refer the opportunity to our salespeople. And a referral gets a marketing type fee similar to our cost of finding a new lead. And we said we would try and recruit 200 of these partners in the first 2 years. At the other end of the scale, we have value-added resellers, IT managed service providers, and for us, those partners range up to organisations with about 50 people in their sales team. And for those, they would tend to want to sell themselves. So rather than refer the business to our sales team, they can sell it themselves. And the money they earn for selling it themselves is very similar to the cost of us selling it. So the cost of a sale for us is very similar, whether it is done by our sales team as a referral coming through the partner channel or whether it's dealt with by partners. And you can see that to date, we had 120 partners signed up by the end of H1. So the rate of signing up slowed, as you'd expect in COVID, but we're still we're going to be very close to our 200 target by the end of the year. 36% of them have generated some sort of lead, and you can see the number of leads and actual sales leads that they've come up with. And that's now making a material contribution to revenue, which is why we're reporting some more numbers. So 8% of our new client wins, 7% of our assurance revenue, and you can see 27% of our new managed service wins in terms of new order book have been generated out of the partner program. So we're very pleased with how that's developing. We've also in this slide shown you a little bit of insight. We don't publish client names, and we don't talk individually about clients and what we do for them, as you'd expect, given the nature of our work. But this illustrates for our top clients the top 5 clients and the contribution they make. So it shows the diversity of sectors, because every sector needs our services. So you can see there we've got no client of more than 6% of our revenue. So we're not dependent on any one client. And we're very diverse across the range of services. And that's proved to be beneficial in COVID. So, for example, in COVID, we've only had one client who's gone out of business, and they were a relatively small managed service client, approximately £1,000 a month, and them going bust. They'd actually owed us no money at the time, so there was no bad debt associated with that. And an illustration of how robust we are in terms of bad debt is our total bad debt in 20 years of business added together is less than £50,000. So we're very good at getting paid for what we do, and clients value what we do and tend to see us as a key supplier and one of those to pay first. So you can see the range there of organisations and their level of contribution. We've also detailed what those top 5 in total contribute to the different divisions. So a little bit more about COVID. So we did see an impact on the assurance division in April. Quite a lot of people postponing and delaying things. That then started to recover as we moved into May and June and continued to date. And we're now at a level which is higher than we were pre-COVID. So for us, we re-engineered all our services to work remotely. They can deliver all of those services. We saw the dip, and we've seen the return as businesses have started to unlock. And a lot of the impact for us was not that cybersecurity wasn't important anymore. It was actually that the IT teams that we deal with were fully occupied, instigating remote and cloud and home working, because they needed that for COVID related. So it wasn't that they didn't need the services, it was just they were preoccupied doing the emergency COVID related things. And then when those were completed, they've returned to doing the cyber projects. One of the things I personally got wrong is that I anticipated and predicted we would see a big spike in incidents. And the reason for that, the logic for that, is that in the last few years, 90% of the incidents we've dealt with are related to people moving into cloud working, home working, remote working. So these are new technologies, people rush into doing it, make mistakes, it causes breaches. And when you saw the mad rush in April for everybody to accelerate those projects, we thought there'll be a lot more incidents. And then our incidents dried up. So I was wrong. My CTO said to me, "No, you're not wrong, Ian. You're not thinking the right time frames, because you'd forgotten that there can be a long lag between somebody causing a breach and the breach materializing and being detected." So he says, "You're right, people are causing breaches, but we won't see them yet." And that has turned out to be the case. As people have started resuming more work, they've started to discover more breaches, and we dealt with more breaches in April in terms of revenue. More breaches in August in terms of revenue than the whole of the year to that date added up. So we've seen a resurgence of breaches, and the breaches are all related to mistakes people have made with their cloud and remote working processes. So we saw a dip in incidents, we saw a dip in assurance, that's now fully recovered. We did take advantage of furlough. So when the activity dropped, we furloughed people where appropriately, but we then have brought everybody back. So we're now in a position where everybody's back full time, and we're now back recruiting. So we're currently 82 staff, and I think we've got 6 vacancies at the moment. So we're back in recruitment mode. We didn't take any loans as part of COVID, but we did take advantage of, as I said at the start, of delaying some PAYE and VAT payments, as most businesses did, and that's obviously helped our cash position of where we are. So I'm very proud of the team, the way they responded to COVID, and we responded very quickly. We got good support from our investors, both existing and some new investors, in terms of a fundraise and adding some more cash. And the team have managed things very well, and the fact that we're now back to a level higher than we were pre-COVID is testament to the fact that there's real continued need for our services, and we're doing a good job delivering it in a different way. There's a couple of knock-on benefits. We've found significant savings in marketing. So we used to do client-facing events every quarter around the country, travelling around the country, taking rooms in hotels and delivering events to clients, which has always been very popular. We now do those with technologies like this. So we do video-based events, but rather than doing them every quarter, we do them every month. And we're finding as many people attend the monthly briefings as previously attended the quarter. So in other words, we've got triple the number of attendees, and it's costing us significantly less. We're also seeing good signs that the sales process is accelerating as well, because the time from meeting somebody new to turning it into a meeting and progressing it into a sale appears to be compressing, because people are doing things via video, and therefore availability is easier to schedule. So there's some interesting efficiencies coming on the sales and management side, and it's going to be interesting to see how that evolves over the next 18 months, 2 years, when we go back into a more normal state. Are people still wanting as much face-to-face? Our philosophy today has very been much, we're a face-to-face business. But now obviously we're thinking, is face-to-face meaning this, face-to-face over video, as much as actually travelling and meeting people? So we publish a range of KPIs, which we've developed and added to over the last couple of years. And although our accounts are pretty straightforward and quite transparent, there's nothing complicated in there, we pull out what we think are the most important metrics. And we've developed these with our institutional investors based on, they're interested in certain things, and we therefore develop those metrics so we can be very transparent. So these are the latest ones here. And I think I've talked about the growth in recurring revenue. You can see there 25%. I think probably the most significant one here is the proportion of our revenue that is now recurring managed services revenue. So if you go back to our flotation at the end of 2016, we're at the level there where about a quarter of the business was recurring revenue. And for these set of results, it's now 45%. So we stated an objective of building the more valuable recurring revenue 3-year contracts, which is based on our technologies. And we've been successful in doing that. So I think the two successes here are the partner program and how that's building, expanding our sales reach, particularly in the SME market, and building the managed services and the recurring revenue as a proportion. You see, we also detail the gross margin for the assurance and the managed detection and response. As a general rule, the sort of margin you get on assurance, being consultancy in nature, is likely to stay pretty much the same. You cannot push your consultants too hard, otherwise you lose your good consultants. And we're very proud of our staff retention, which is typically over 90%. So you can't push your margin too much on that people side. Where you've got the technologies and the automation, the continual development of things like artificial intelligence, you can get more and more efficiency. So it is not a linear cost when you expand managed services that you get the same costs coming through in terms of delivery. We also, on the managed services side, recruit and train a lot of our own people. So we take people, graduates, student placements, and apprentices. So we have a good track record of training young people, and they tend to enter the business on the managed services side. You can also see at the bottom of the KPIs our investment in R&D. So a significant part of our value is our intellectual property. All our systems are designed for remote management. So one of the key things for us is efficiency and scalability. You find quite a few managed service operations are taking individual bits of software that are normally sold for people to use themselves, and they just run multiple instances of that software for each of their clients. Not scalable and really difficult to manage. And you tend to find that you need individual dedicated people per client. Whereas we have a shared model where all the systems are integrated. So all the reporting of all this management that we're doing and monitoring is all on one big coherent system, and everything is designed from the ground up to facilitate that. I know somebody's asked a question about partners and margin. So I'll just go back to that because that's a relevant question. We were quite careful in how we designed the partner program, knowing that certain sales would end up having to be dealt with by our sales team because they're more specialist sales and probably beyond what the partners could do. So the amount we pay for a referral, where it goes to our sales team, was calculated on what was a typical cost of our marketing to generate the same lead. So therefore, we're pretty agnostic. Has it come from our marketing or from a partner? The cost is very similar. And equally, when the partners do their own sales, we equated the commissions and the fee they make to be approximately the same as the cost for us to employ a salesperson and pay commissions. So really, wherever a client comes from, whether it's a partner or from our own marketing and our own salespeople, we don't mind. The margins are designed to be the same. Okay, so in terms of the market, I think most people recognise it's a growing market, but in terms of putting some firm numbers on there, we've got two sources of numbers. One is the UK cybersecurity market. There was a report from government earlier this year, and they valued the market at 8.3 billion. I would say I think that's a little bit over the top. If you read the detail of the report, they've got a very broad definition of what is cybersecurity. But I think the exact number doesn't really matter. It's just saying it's a lot bigger than people like ourselves. So the addressable market is huge in the UK. And that's one reason why although we've worked in 30 plus countries where we win business in the UK and people will take us to do work abroad, we don't try and develop our service outside the UK because the UK market, there's so much to achieve here. In terms of growth rates, the number on the right, the 9%, comes from the Plimsoll analysis. And we use that because it's a very fragmented market, lots of new entrants and smaller organisations. And Plimsoll report on more than 500 organisations in the UK. Now, clearly their growth rate, because those organisations aren't publishing P&L statements, they have to imply it from balance sheet, but it doesn't mean that we get a measure. And we think 9-10% is about right as a growth rate for the market. Our long-term historic growth rate is 20%, so we typically organically beat the market by twice. I'm going to have a look at some other questions here, I hope you don't mind. And one is, how do you explain the revenue growth is below many of your peers in the cybersecurity sector? Well, I'm going to come on to some comparators. And I would say the first thing you need to look at when you look at somebody's organic growth is firstly look at their size, because obviously when you're very, very small, you can have some impressive growth figures. But also there's quite a few people of our comparators who are acquiring companies. So when you look at the revenue growth, it's actually acquisitions that they're reporting. So the first thing I always do when I look at our comparators, and I'll show you in a moment who they are, is look at what's the underlying like-for-like organic growth. So that's what I track. I think that's the most important thing, because you often find that growth is hidden by doing acquisitions. And then I have another question down here. What percentage of incident response revenues come from existing managed service clients? So that's a really interesting one. Very little incident response from an existing managed service client, because the very nature of a managed service client is we're likely to have helped them improve their security through assurance work. And we may have recovered them from an incident as the starting point of that process. And then we develop a managed service and the monitoring. And the whole point of the monitoring is to spot incidents really early so that they don't escalate. So by its nature, a managed service client should be in a position where they don't have expensive incidents. That's the whole value of our service. We should have got them to a point where we can control the incidents. So an example of that was this month. So you may have heard this month, lots of universities being hit by ransomware. Ransomware is a very common attack where the hackers will encrypt your files so that you can't get to them, disrupt systems, break things, and then you have to pay a ransom to get access to your data. And you'll have seen in the press a number of universities who got hit quite heavily with that. Well, there's a university that's not in the press that has done a number of things with us over the years and has that 24/7 monitoring. And we were in a position to be able to confirm through that monitoring that they were in the early stages of what was going to become ransomware, and we could intervene 24 hours before it became serious. And we've been helping them for about the last 4 weeks to recover from that and deal with the situation, but it never escalated into the huge impact that you've seen in some of the other universities. So their precaution in buying the 24/7 meant that they didn't then have the serious incident. So the big incidents for us tend to be somebody we haven't dealt with, who hasn't had that help, still in a bad state. They have a massive incident. We have to sort it all out. The good news when somebody does have that incident is that we're always successful in solving the problem and recovering, and they then will tend to want lots of services, and particularly will want managed services and the monitoring. If it's a significant incident, we send a van with some racks of equipment and plug them into our managed services so that we can monitor what's happening on their network and turn them within hours into a managed service client. And at the end of the incident, typically people will want to continue with that sort of service. So the investment case is we've got a very good market, a good growing market, very experienced management team, been working in this sector for many years. We've got a history of organic growth, so no acquisitions. Our 20% average is purely organic. We have our own technologies with our own intellectual property, continual investment in that R&D. The true 24/7. So the UK and Australia has significant advantage in terms of delivering that. And you've seen the diverse client base means that we're quite resilient, and the fact that we've come out relatively unscathed from COVID-19 shows that resilience, and now back into profitability. And I'll mention profitability in terms of our comparators. And we hold the sort of credentials that you would expect and have the client case studies that you would expect for somebody who's been working for this period of time. In terms of who we compare ourselves against, if somebody was looking at particularly AIM, but NCC being the biggest player in the UK, these are the companies that we monitor. So these are the companies that we watch closely. We look at their results and compare their market value with what they're actually achieving. And the things I look for particularly are underlying organic growth. So trying to dig underneath the acquisitions, which tend to have led to quite a lot of dilution, and what's the actual organic growth that they're generating. And then look at profitability. So are they actually generating profits? So where you've got a company where their losses are still more than their revenue, then that's going to be difficult to recover from, and they're likely to going to need continual flows of new cash. So I think what the sector really needs to be doing is get on the road to delivering sustained profit. So we were generating good profits before we floated. We raised £5 million. We invested that. That allowed us to scale the business. That allowed us to open the new security operations centres in the UK and Australia. And now we've come out the other side of that and returning back into profitability. So I think that's what you need to see from the sector is good organic growth and profitability. I've got a question here for was the cash of 1.64 by the 18th of September benefited from the payment of an R&D tax credit? Yes, it was. Well spotted. Yep, that was the thing that happened after the end of H1, that we do get R&D tax credits, and we got a payment in there. I think we're still due some more. I think we've got most of it, but not all of it. So yes, that was the reason for that. A question about the partner program. Do you think it will eventually lead to revenue growth of more than 20%? I think that's our intention. We've got a very good, stable internal sales team, but we identified, as well as the challenges of recruiting new salespeople, there's an element of the market, particularly on the SME side, where companies trust their local IT supplier, and that's understandable. A lot of companies don't have much IT expertise, so they tend to have a local supplier who sells them the hardware and software. And they trust them with all their systems, which by implication means they're trusting that IT supply with their security. So if you try and sell into that SME sector, you tend to find that they'll just go with whatever their local supplier recommends. So the beauty of the partner program is that we now have that relationship with those trusted third parties. So when somebody is looking for cybersecurity, those IT companies tend to be their source of advice and guidance. And we're finding that there's a lot of interest from partners because they recognize that cybersecurity is a growth market. Their clients are asking for it, and they don't really have the expertise. Some of them have dabbled in it and found it to be difficult. And one of the things that characterizes this sector is that there's lots of opportunities, absolutely. It's a growing market. There's a real need for the services. But these services are not easy. They're not easy to design and deliver. They're technically complicated. It changes all the time. And also, they're not actually easy to sell. You might think they're easy to sell because you think that there's a lot of interest. But there's a big difference between interest and actually purchasing. And what you'll find is that quite a large proportion of these services are first-time purchases. So it's quite rare, for example, on a managed service that we will be taking over from a failed service. It happens, but usually the managed service is the first time a company's invested in that sort of protection. So there are exceptions. Penetration testing has been around for, as I said, 25 years, and people will rotate suppliers and try new people, and they'll have bought that every year for sometimes decades. But a lot of these services are first-time purchases, so the sales process can be complex, and the sales process, you need good people, well-trained and well-developed to do that. And the delivery side is difficult and challenging. So that's where experience counts and getting the best people. So as I said, that's who we compare ourselves against. And I look at organic growth and return to profitability as being the key metrics that we need to see in this sector. So in summary, we've got positive cash flow and return to profit, strong recovery in Q3, and the outlook for Q4 is the same, very strong in September and looking into October. Good uptake on the partner program, opening up new opportunities, new clients, material effect on sales, and opening up new avenues, particularly into the SME markets. And that continued focus on managed services, the managed detection and response, and recurring revenues. We'll keep innovating our new technologies to illustrate just how fast things have to change in our sector. When we started in 2000, there were every year a few hundred new hacking techniques and vulnerabilities on systems. So a vulnerability being this particular software or IT system has had a newly discovered way of hacking into it. So that's what we mean by a vulnerability. And when we started, there were already hundreds of those every year. And we used to meet once a week, have a formal meeting, sit down and look at what's new this week. What are the new vulnerabilities that are happening? How does that impact on us? How does that impact on our clients? What do we need to do to innovate for these? That grew very rapidly to the point where we were doing that every day. And for the last 3 years, we do that exercise that started off in the year 2000 once a week. We do that every 8 hours. So 7 days a week, every 8 hours, twice in the UK, once in Australia. We have a formal review of what's new. And those vulnerabilities that were at the level of a few hundred a year over the last 3 years have averaged at about 15,000 a year. So that equates to about 40 new technical vulnerabilities, new ways of hacking systems discovered, 40 per day. And that really illustrates the challenge people have and why cybersecurity is so difficult, and why they need help from specialists such as ourselves. And then in terms of growth strategy, clearly our history is about organic growth, long-term averaging, as I said, about 20%. And that's what we've got a lot of experience in, and we're very successful in doing that. And we're good at winning new clients, and the partner programs accelerating winning clients. We do look at acquisitions. We sometimes get approached by people who would like to be acquired, and we do look at acquisitions. But I would regard us as acquisition cautious. And I would say that's for 2 reasons. One is that our sector has seen quite a lot of acquisitions done by the people that haven't delivered value. And we all look at dilution. You've got a management team who have all got a level of ownership in the business. So we're very conscious of where our share price is and what the dilution is. And then what are you buying? You know, so if you're buying somebody in our sector, you tend to be buying people and client relationships. Well, we're very successful at recruiting and retaining people anyway. Or you might be buying technologies. Well, we develop our own technology. So if there's a particular technology that we thought was going to be really helpful and useful to our clients, we would already be developing it, already have it in place. So we're open to acquisitions. And we've certainly got support from our institutional investors if we wanted to do that. But I think we're on the cautious side of the scale for acquisitions. So organic growth is certainly our number one priority. So that's a guide for the future. We have some more detailed numbers, which I don't plan to go through because I've already been going on for more than 50 minutes. So thank you for the patient people who are still there. So we have the numbers in the presentation, but I'm sure you'd want to look at the RNS to get more detail on those. So at this point, I will hand back to see what questions we have.
That's brilliant. Thank you, Ian. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. Just while Ian takes a few moments to review the investors' questions submitted today and ahead of going into the Q&A session, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. I'd also like to remind you that feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can understand your views and expectations, and we would very much encourage that to happen. Thank you very much. Ian, we did have a number of pre-submitted questions, and obviously you've got those questions that you've been taking on the fly during the meeting, but if I could just pose these questions to you, and then
can I just, before you do that, can I just answer a really interesting one that's just gone on about spread?
Sure.
because I've been asked this before when I've talked to small investors. Yeah, I've had a number of complaints about our spread between the buy and sell for our shares, and I've at times done analysis of our spread compared with other people, and had my own grumbles about whether the size of the spread. But I would just say one thing about spread is that if somebody's looking at long term and looking at where our share price is now, and the fact that it was consistently at 3, 4, at one point hit £5, and look at our progress since that point of time, then if they're investing for the long term, then the exact spread at the moment is pretty irrelevant. But I would also say it's a really false number. If you try and buy our shares and the price you are offered is that headline buy price, then I would say find somewhere else to buy your shares. Because the reality is, if you have a share trading platform that allows you to actually bid and actually try to buy shares, not just at the headline price, the actual spread, if you look at real trades, is a lot smaller than that advertised price. So for the more seasoned investors, I'm clearly speaking to the converted here, that you'll know that. But if you look at the actual trades, they're nowhere near the size of spread that you'd see advertised when you just look on the stock exchange. But I do agree. And when I buy shares, I'm also aware of that as a downside. But the reality is that the real spread is nowhere near what you would see advertised. Sorry, I'll hand you back to.
That's absolutely fine. And of course, investors can always put limit orders in when putting their orders into the market. Right. So the first question that we have is: ECSC has highlighted itself that there were many offers to buy the company pre-IPO. What would Ian Mann's view be to a takeover bid now? Realistically, no bid can be succeeded without his support.
Yeah, I think it's a good question. We did have a number of offers to buy the business. A lot of businesses our size were being acquired. We decided that selling 2 years before GDPR was coming along, which is a big impact on our sector in terms of levels of fines. Illustration of that is that when I first started in this industry, if you as a business lost personal data, you got a personal fine on directors, which you might think that's a good enough cautionary tale for people to take care of their data, but the fine was a maximum of £50. So we've gone from £50 as a maximum fine to the GDPR fine for British Airways of 183 million. So it shows how things have changed there. And we thought selling the business 2 years before that sort of legislation comes along wasn't the smart thing to do. So we wanted to scale the business and wanted to make investments. We chose flotation as the route. We even had somebody try to buy us in the middle of our IPO. But what we said to investors when we floated, and it hasn't really changed, is that we would anticipate at some point we will get bought. We have the services, the geographic spread with the global operation, our own technologies. We will be an attractive acquisition for somebody at some point. And I said that I would not stand in the way of that at some point, but it has to be when that makes sense. So you've seen share price in the £5 level. If somebody thinks acquiring us for 20% above today's share price is worthy of a conversation, then they're clearly misguided. But yes, one day it will happen. We never set a time frame on it. And I said when it's right for everybody, then I wouldn't stand in its way. So this isn't going to be my baby that I can't let go of. At one point, that will be the right thing for all shareholders, and that applies to the whole management team, because everybody's got a level of ownership in the business.
Thank you very much. A couple of questions about, I guess, acquisitions and raising of capital. And if I put those together, does the company plan to make any acquisitions, or does it see sufficient organic growth opportunities? Can we expect to see further consolidation in cybersecurity? And added on to that, does the company have plans to raise funds in the near to medium term?
I think we have very good support from our institutions. I think we could do acquisitions at any time. As I think I said previously, we're very mindful of dilution. Current share price doesn't make that sensible. And we would also have to be very clear on what value we were getting. I think if we can continue, and I'm very confident we can, with a really healthy organic growth and combine that with being back in profitability, then we don't need to do acquisitions. So I don't want to be in a position where acquisitions is the only way that we can demonstrate growth and try and demonstrate we're going somewhere, when the market has had a pretty poor record in terms of acquisitions delivering value. So we're cautious, but we're open to the possibility, but it has to be the right acquisition for us.
Thank you very much. There are obviously a couple of questions that have come in the live event, and I think you've touched on the partner program. But the pre-submitted question here is, how will the company be developing and growing its partner program? You have touched on this, but if you could expand a little.
Yeah, it's a good question. We said at the start we'd aim to get 200 partners, and we said the first thing is see if there's an opportunity there and there's a demand, and there clearly is. We've had very good response from the partners in how we manage the partners and how we treat the partners and how we train them and develop them. So everybody's very happy with that, and the partners are very happy with the feedback they get from their clients, where they see our providing that service is enhancing their relationship with their clients. We didn't know exactly the shape the partner program would end up with, because you don't exactly know who's going to sign up. So we said, let's set a target of 200 by the end of this year, and then we'll review where we are. And what have we learned along the way? Well, there's a couple of things we've learned. At the start, we thought there would probably be 50-50 between referring business and people the partner selling it themselves. And that was an estimate based on not really having a clue, combined with, well, let's just call it 50-50 and we'll see how it goes. And as you'll see, it's turned out that there's a lot more referrals than there are partners selling themselves. That's fine. Our sales team are very happy with that, get lots of referrals. But we think there's more potential for the clients to sell themselves. And we've seen that they have struggled with their sales team moving from simple selling hardware and software to selling more complex things that need a more consultancy approach. And so that's our focus now, is working with the larger partners, with the larger sales teams, to help train and enable their sales teams so that they can handle the complexity of what we do. The partners are very happy with that because it's developing their skills, and it means that we broaden out that sales reach. So that's really the next stage for us. Whether we go far beyond the 200 has yet to be decided. We said we'd review it at the end of the year. So we may say, look, we don't need more partners. We need to work more with the existing ones. So that's really under review.
Perfect. Obviously, I'm mindful of time, and I know you've got a number of live Q&A questions. So there's a couple here that I think you have talked about the cybersecurity landscape and I guess how you've responded to the challenges. And I think you've also additionally touched on COVID throughout the presentation. Do you think it might be sensible if I just ask you to go through the Q&A that's come in the live event, perhaps, and then pick off any of those there that investors have submitted during the event that you might feel appropriate to answer now?
Yes. Now the company's in profit, what do you need to do to stabilise the share price? Well, I think, we're not in normal times here. Our share price is about half of what it was at the start of the year. It doesn't bear up to, the actual results we're putting out and how we've coped with COVID, but the whole market is depressed. So I think, you could look at it either that there's a real bargain there for somebody, or you could just say, well, what's a normal price? I think the key thing for us is we've kept developing and improving the company. We've got a good organic growth history. We're now moving back into profitability, and the share price takes care of itself. You just have to keep improving the business, and the share price will be the share price, and it eventually it will be a level where I won't complain that it's too low, like every other CEO does. And then I'll just go to one at the bottom. You mentioned the importance of institutional investors. Would there be a capital raise to fund an acquisition? Would ECSC intend to allow private investors to participate? Well, because we're so cautious on acquisitions, I think it's a bit early to say that. At the moment, we've got a lot of demand from institutional investors. So when we raised money earlier in the year, that was fully subscribed. That was partly existing and some new investors. So there's interest from those institutional investors. So at the moment, I would say if private investors want to participate, then they should just buy off the market. The shares are at a good price for people to make an investment at the moment.
Perfect. I think that's. I think you've taken a lot of these questions. There were a couple of follows on, I guess, from ones around price and stuff. But of course, we can always review those post this meeting if we have missed any. Perhaps Ian, I could ask you maybe to just wrap up, and then what I'd like to do is divert investors to provide the company feedback, because I know that that's pretty important.
Okay, well, thank you everybody for attending. Hopefully today you've learned a little bit about the range of services we do, how important they are, and the growing importance of those, and the things that make us different to our competitors, both in delivering organic growth and our own technologies, and the things we do that really every single organisation needs in terms of preventing breaches that now have such a big impact. So look forward to speaking to you again, and when we get back to normal times, meeting some of you at events as well. So thank you very much.
That's brilliant. Thank you very much indeed, Ian, for today updating investors. Could I ask investors please not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback. As you'll know, if you access this meeting from our website, the feedback page will appear. If you access this via the link in the email, you'll be asked to log back in to provide your feedback. On behalf of the management team at ECSC Group PLC and Investor Meet Company, I'd like to thank you for attending today's presentation. That now concludes today's session. Good morning